Is this market gonna crash? Are we in a bubble? Is it about to burst? I'm Joe Parker with the Santa Barbara Group, Berkshire Hathaway Real Estate, and I'm gonna break down my predictions. Talking to a lot of buyers who have been in this market and seen how hectic it is, how competitive it is, a lot of them are starting to think that maybe we are peaking, maybe we are in a bubble, maybe this market is gonna crash. Maybe now is the time to get on the sidelines and wait and see what happens. From my perspective as a realtor for the last 20 years here in Santa Barbara, a native born and raised here, I have a little bit of insight on this. I'm thinking that this is not a bubble. We are not in a market that is about to crash. I have a few reasons I'm gonna explain why I'm having this thought process about the market right now. Number one, low inventory. The market has been extremely tight for a long time now, and the inventory is super low. There's not enough people willing to sell their properties. So with the low inventory, that's a key indicator that we are not about to burst. We are not about to crash anytime soon. There's also super high demand for our community here in the Santa Barbara area. Couple that with the incredible amount of wealth in the world right now. Individuals all over the world really like our community, and they have a lot of money. As the pandemic kicked in and a lot of people even locally in the region of California came out of their bubble and saw that Santa Barbara was less expensive than where they were coming from, like the Bay Area or the coastal areas of LA, Orange County, San Diego. All these communities tend to be more expensive than Santa Barbara. And if you look at it, it really doesn't make sense. Santa Barbara is as nice, if not nicer, than these areas. And a lot of those people came to Santa Barbara and saw that and realized that. And they immediately injected a ton of value into the market, kind of resetting our norm of what values are. Almost overnight, we saw values jump 15% or more. So this is one of the things that's going on that's bolstering up this market, is that we have a ton of people who really want to be here. So demand is super high, inventory is super low. The other thing is that there's a large amount of equity in the market right now. Back in the day, whenever we had the run up of 2000 through 2006, when we had these fake mortgages, we had almost signature loans to buy a property, lenders doing negative amortization loans, doing 125% loan to value, crazy stuff that was happening. That was a market that did not have a lot of equity in it, and when it burst with a fury and it deflated quickly. This market that we're in now has a ton of equity. It's bolstered by really strong loans that have been organized by new lending practices that is scrutinizing the buyer very closely and requiring decent amount of down payment on a lot of them. So you got a lot of equity. On top of that, we're seeing unprecedented amount of cash offers buying properties. The ones that are bidding it up 3, 4, 5, 600,000 over the asking price, they're paying all cash. So not only are we resetting the market at a new high level, but it's being done with cash without any leverage against the property at all. So all this equity in the market is another thing that is gonna keep this market strong for some time now. Now, the only indicator that I could see that's gonna slow this march upward in value, interest rates decline. Now, if interest rates go up, I think that will put the brakes on this appreciation boom that we're seeing right now. But right now, we're not seeing interest rates climbing anytime soon. And I think the key indicator to watch out for are job reports. When job creation happens, that's when we should start seeing these interest rates start to climb. And that's when this crazy market may start to calm a bit more, right? It may settle down and we may even see a flat section if interest rates really climb. But all these indicators, low inventory, a ton of wealth, high demand for our community, a lot of equity in the market, low interest rates. Those are all my predictors that we are not in a bubble. This market is not gonna crash. And if you put yourself on the sideline, you may be missing out on a few more years, if not more, of appreciation here. So figure out a way to make it work. Even if it's not what you're hoping to get, just get in the market so you can start riding this. And we've got lots of creative ways to do this. Not all lenders are the same. There's different things out there that are going on with products that are available. So we could help get you in touch with the right mortgage broker to get the right loan for you and find the property that will get you in this train, get on this momentum bus here and ride it, and maybe transition into something that would be better for you in the future. But for right now, focusing on getting you in the market. That's my prediction. This market is not going to crash. It's a strong market, and let's talk more if you're trying to get into it. Thanks for watching, everyone. Make it a great day.